all have to agree that 2025 has been brutal for people investing in treasury bills and treasury bonds because, the interest rates for these instruments continue going down. And for money market fund investors, you are feeling this as well, right? Are you feeling the weight, or are you in the top 7 money market funds that I'm going to be highlighting here today? So today we are looking at a list of 7 money market funds that have been doing relatively well despite the declining rates in treasury bills and bonds. So in this video, you will discover exactly which money market fund are defying the low rates. We will look at the gross returns, the after-tax returns, and also we are going to be highlighting where these money market funds invest their money, which might be the reason why they are defying the low rates. All right. Welcome to Study of Wealth. My name is Susan Chuguna, and first things first, why are the money market funds rates, or rather, why are the interest rates for treasury bills and treasury bonds declining? Allow me to explain this in a way that you're going to understand. It's always prudent to know the reason behind what is happening, right? So this is how it works. The CBK, that is the Central Bank of Kenya, has a role to control inflation, and it does this through various ways. And one of them is to adjust the interest rates on treasury bills and treasury bonds. So when the inflation rate is rising, meaning that the cost of goods and services is increasing, or the cost of living is increasing, it usually means that there is too much money in circulation in the economy. Yes. So to reduce the excess cash in the economy, CBK increases the interest rates in treasury bills and bonds. What this does is it attracts investors to put money into treasury bills and bonds, meaning that the CBK is taking money away from the economy, because when interest rates are good, we invest more in these instruments, which ideally reduces spending and also slows down inflation. This is exactly what happened when inflation was high in 2023 and in the beginning of 2024. The CBK raised interest rates to curb rising prices, which is why we saw an increase in the rates in treasury bills and bonds, and as a result also in money market fund. And this is the same reason why so many people were speaking about money market funds and treasury bills and bonds, because the interest rates were good. And now we are on the other side where the inflation rates are declining, and currently the inflation rate is at 3.28%. That is annual inflation rate, which had actually gone down to 2.99%. And now the central bank has begun to lower the interest rates to just stimulate the economy to stabilize the rates. So the logic behind it is lower interest rates makes treasury bills and bonds less attractive, and this discourages people from putting money in these instruments, or putting money, or lending money to the government, or putting money into the CBK through this instrument, which is working very well, because most of us are thinking about where do we put our money so that we can earn more interest than what we are getting in treasury bills, bonds, and also in money market funds. The CBK does this to encourage people to spend or to invest in other areas like businesses or stocks or any other investment, which helps in keeping the economy growing as well as increasing money in circulation. And I think I should do a video on how money is created and how money works. Please stay tuned for that, because I feel like we need a lesson on this. Yes. So the last question we are going to answer before we get now to our list is, how does this now affect money market funds? So we all know that money market fund invest heavily in treasury bills and bonds, and lower CBK interest rates mean lower returns for MMFs. And that is the reason why people are talking about leaving MMF and investing in other areas. But I also want you to remember, while interest rates are still low, so is the inflation rate, meaning that it's not all that bad. And the fact remains, MMFs are still a safe place to store your emergency fund. And if you already have your emergency fund secured in one of the top money market funds that I'll be sharing here today, it's time for you to start exploring other high return investment like shares, or maybe special funds that invest in shares that we have been covering. here on this channel, which could offer higher returns as the rates decline. Or maybe you can consider starting a business if that is something that you're interested in. After all, that is what the CBK want us to do anyway. So make sure that you watch the videos that we have covered on special funds. You see whether it's something that is going to interest you, and more of those are coming. I'll be reviewing more of those. Now that we know what is happening to the interest rates in money market fund, we can now go to the 7 best money market funds which have delivered an average of above 15% returns on investment in the 2 months of 2025, that is January and February 2025. So I analyzed data from these 2 months to come up with this list. Okay, let's get into it. At the top of our list is Cytonn Money Market Fund, which offered a gross return of 16.84% and an after-tax return of 14.31%. Now, where does Cytonn invest the funds to get these good returns? Here is a screenshot of where they invest their money, and as we go down the list, I want you to note the difference in asset allocation of all the money market funds that you'll be covering here today, and maybe you can compare these with money market funds that don't do so well. All right, the last thing that I'll be mentioning when looking at this list is when the fund was launched, and Cytonn Money Market Fund was launched in November 27. This gives us an idea of how long the fund has been in operation, and it helps you when it comes to diversifying, because I know that there are some people who like established money market funds as compared to new money market funds. So these will help you in making that decision, okay? Coming in second is Lofty Corban Money Market Fund with a gross return of 16.38% and an after-tax return of 13.92%. This fund has been in the market since March 2024, and here is a screenshot of how they allocate their assets. If you have watched this video to this far and you like what I do here, the free and simple way for you to show support is to like and subscribe to my YouTube channel. And my commitment to you is I will keep doing more research on investment opportunities and doing more reviews so that we walk this journey together. As we learn, let's keep implementing what we are learning as well. Coming in strong at number 3 is Etika Money Market Fund with a gross return of 16.33% and an after-tax return of 13.85%. This fund was launched in 2023 and has shown a great track record since inception, and we are hoping to see more of this. And here is how they allocate their assets. At number 4, we have Kuza Money Market Fund with a gross return of 16.30% and an after-tax return of 13.80%. This fund was launched in December 2022, and here is how they allocate their funds. Next up is the Avocap Money Market Fund with a gross return of 16.20% and an after-tax return of 13.70%. And this money market fund has been in the market since June 2024, and here is how they allocate their funds. And our number 6 in the list, we have the Madison Money Market Fund with a gross return of 16.15% and an after-tax return of 13.65%. This money market fund has been in the market since November 2011, and here is how they allocate their funds. So if you want to invest in the top 7 with a company that has been in the market for a while, then this is the fund for you. Based on the data that I had, ZD Money Market Fund was supposed to be number 7 in the list, but more recent data, that is data in February, it has shown a decline in ZD Money Market Fund rates compared to other money market funds. But because I wanted to prioritize funds with consistent higher returns despite the declining overall interest rates, I decided to include Dry Associate Money Market Fund at number 7 with a gross return of 16.05% and an after-tax return of 13.55%. The Dry Associate Money Market Fund has been in the market since 1st July 2016, and this is how they allocate their funds. I would like you to note that although this fund has been in the market for a while, the minimum investment is so high for most of us, but it has great returns. As we conclude, remember to diversify your investments and, of course, to do your due diligence before investing. Here is a special fund that has amazing returns you can explore to invest. Thank you for watching and bye. See you in my next video.